Aloha and welcome to Java. Thank you for joining me. It's Monday, February 12th, 2024. I hope everybody had a good weekend. It's Monday and we're ready to be back. So I've got quite a few things to go over with you. Like always, we've got the MMRI, or favored risk indicator, is still relatively level. It's at 270.6. Of course, not much going on right now until markets open. However, we'll be watching the relative strength of the dollar and the 10-year yield as always. So right now, market's kind of flat, futures mixed, so kind of a level and expecting again a relatively quiet day, barring anything going on. So I've got this up here, Gemini. They are a cryptocurrency exchange, trade, and also custodians. So I've got these up here because I've had a few people asking me how they can purchase cryptocurrencies. So ideally you want to go peer to peer and go completely decentralized, but a new person to this space, this is an easier way, in my opinion, to get exposure. So I'll leave a link below in the description. Now, I think that if you open an account with the link below, I think they give you $5, like me, $5. You don't have to use it. I'm not here to shill anything on anybody. I don't even put on monetary right now. So I do this to get the news out to people. So I just want to give you, in my opinion, they're a good exchange. I've been with them already for a few years now. Back since they started, I've used a few exchanges and they are very stable. They don't have a large variety of cryptocurrencies, but they have the one that I think matters most, which is Bitcoin, and then also Ethereum maybe behind that. So it's a good, easy way with low fees to purchase this. And then I highly recommend either Trezor or a Ledger. I prefer my Trezor. To be honest, there's a couple other hardware wallets, and maybe I'll put those in tomorrow or something for that. But anyway, if you would like to check that out, it's called Gemini for your cryptocurrency. So the sentiment right now for the markets is wary anticipation. We do have inflation data ahead this week, the CPI and PPI, so we will be watching that. Fed calendar this morning, we've got Bowman speaking, and then we've also got the federal budget balance, but I don't expect those to be market movers in themselves. So we've also got Crazy Kashkari is going to be speaking. Tuesday, we will get core CPI, and that will be something we'll be watching. Keep an eye on that 10-year yield again, but I'll have this out again tomorrow morning and see how things are going. This is our earnings for today. Not anything really in particular that I am watching. So we'll just kind of move forward. This I wanted to bring up, and this was part of my concern for the weekend and why risk was additionally heightened. And it's because it was the anniversary of the Islamic Revolution. So there were major, basically, celebrations and parties, this going on all around the world. So they're inflating it a bit, of course, talking about world leaders congratulating Iran on this. So it's heightened risk, if you will, for the world. But at any rate, nothing blew up at the Super Bowl that wasn't supposed to. Kind of everything went as planned. I didn't watch it. I'm not quite a Super Bowl fan anymore. I'd rather watch F1 if anything. But anyway, let's move on. So I wanted to bring up something that I do think is important and has not been mentioned very much. So it's M2. M2 is the secondary measure of money supply. So M1 is immediate liquid cash that people have, cash checking and saving accounts. M2 adds in what you can easily liquidate, checking deposits, and then other types of deposits such as CDs. So the reason I'm bringing this up is this number right now is in decline, in rapid decline. And what this means is basically that people have run out of, as we've been talking about, running out of their resources. They've been getting loans, using credit cards after the loans, and then going to buy now, pay later. So they've basically drained everything they've got as far as any type of emergency funds, and that is what the Federal Reserve has been really pushing towards. So people cannot continue to spend. So once they don't have jobs and they don't have savings, then they will cut rates. but not prior. Because if people just go out and start spending again, then the inflation will come back. So, with that, let's get into the markets. Got quite a few stories. Right now, there's kind of a euphoria with everything going up. Only about 25% of experts predict a recession this year now, as opposed to closer to 80% less than 30 days ago. So it's changed significantly. Everybody's getting happy and thinking that the recession is over. And to me, that in itself is a danger signal. We've got everybody basically stacking on one side of the boat. With this, we've got Ukraine aid package approval gaining momentum. So it has not been approved yet. Something will be approved. It will be in the billions of dollars range. But this one in particular is going to probably be revised a bit. But it doesn't matter because all of this is massively inflationary. And basically, that means purchasing power is going to go down and just adding to the problem. So, in a short story here, we've got Jeff Bezos is selling nearly 12 million Amazon shares worth about $2 billion. So, they have to declare when they're going to be selling a large number of shares. So, this is going to happen in a steady fashion, but we'll be watching Amazon on this. So this story came out 10 countries nearing economic failure. There's quite a few on here that I think are a little slanted and very interesting, one of them being Ukraine. But this is, in my opinion, of their own doing. So just this is a global issue. So I want to bring up a few more things because the one that is of significance in my mind is, of course, Germany. So Germany is having a property slump from their office, commercial real estate, and it's showing that they have a record drop. The manufacturing is down, and they were the powerhouse of Europe, and all built on the back of cheap energy. Well, now their industrial companies are beginning to shutter. They've got short sellers are beginning to take bets on nearly 8% of a German bank. So this is going to be the next bank to fall over there, kind of a subsidiary like Deutsche Bank. So, moving forward, what's going on in other places? We've got Russia. They've jumped to the sixth place in terms of foreign exchange holdings, foreign currencies, with the World Gold Council, and they're stacking gold like never before. They are determined to get off of the US dollar, petrodollar, if you will. They've already been working trade outside of it. So we've also got Zimbabwe's government talking about using gold to back its currency. I think there's an awful lot to this. They would have to do a revaluation, and that would kind of crush their dollar, honestly. So we'll see how they do this moving forward. If they do, it would be very significant. So we've got China. I thought this story was actually very interesting. So the lead in electric vehicles, China, is leading the world in new coal power plants. So coal basically is one of the dirtiest energies to burn that they've got right now. And so basically what they're doing, shoveling coal in, burn the coal that creates the energy and charge the car with it. So a lot of people don't realize this. They think that they're clean electric vehicles. They don't ever think about where it comes from on the other side of the plug. So at any rate, moving forward with oil, which is really the direction I'm heading as the commodities. So coal is on an up, even though it's the first one that they want to get rid of. We've got Diamondback is a huge company looking to buy Endeavour. So this is going to be another major merger for oil. So we'll be watching that one. We've got oil beginning the week lower right now, as Israel said that they have concluded their Gaza strikes. So the war is not over, it's not ending, it's going to be perpetual. But on the just this kind of whim that it might be ending or coming to an end, oil is dropping. So that should tell you what oil does for basically the military industrial complex needs that lifeblood fed into them. So it is affected. So got a little bit, they're saying that there is supply tightness in Europe over crude oil. So if this comes out, this is going to be inflationary for oil. So despite, even if the war did end, the price of oil will continue because it's all commodity based. And I think that's the sector we're going to watch some rotation coming into. Maybe it's hard to put timing on something, maybe towards the end of this year or into next. So with this, we've also got cocoa prices soaring to a record high, and it's because the growers are having a difficult time agriculturally. So only have one love update, which I think is very encouraging. The European Union, it's basically the farmer protests were effective at least to a point. They have not broken yet, but they have basically forced the European Union leaders to kind of backtrack on their climate policies. They did make some changes in basically concession to the farmers there. They're pushing for more, and I think that they should. One of the things I do want to mention is that they're trying to make farmers, this is also true in the United States, go for carbon credits or selling off portions of their land or control of their land or their ranching farming for these carbon credits. And I don't think that's a good idea. That's just my opinion. However, I would love to hear from anybody in the comments about this, what you think about these carbon credits, and yeah, just give me your opinion on that. In particular, buying them from farmers. So, with that, if you would like and subscribe, and until I see you again, my friends, stay free.